Today, I'm very thrilled to be joined by three amazing institutional investors, Sandesh, Erica, and Mark, to tell us a little bit what they are seeing in both the private and public market in terms of AI investment. To kick us off, maybe you can give me a little bit introduction of what your firm does and what's the one thing in AI that you're focusing on.
Sure, thanks for having me. I think Eva already gave you a quick introduction to my firm. So we are, again, repeating a few things here. We are a captive fund to an endowment. Endowment was set up to support a foundation. So we have roughly about $25 billion in the endowment. We invest in an evergreen capacity, so we do, essentially, we don't have fund life cycles effectively. So we do early growth and public markets in a captive fashion. And so for us, duration matters a lot. And in AI, as you can imagine, this is the beginning of a very, very big trend. And I think with evergreen capital, we think we're well positioned to kind of set ourselves up for watching the evolution of these companies, not just as private companies, but also as hopefully enduring public companies as well. So we have a very long duration view to everything that we're looking at in AI.
I'm Ulrike Hoffmann-Burchardi, CIO of the Americas and Head of Global Equities for UBS Wealth Management. And we have a framework for how we formulate our equity views that has three perspectives. One, the macroeconomic landscape, then two, the bottom-up company-specific fundamentals, but also a third lens, and I think that's still one that's underappreciated by the broader institutional investment community, and that is transformational innovation. And it's interesting because so much of value creation in the equity market has been driven by transformational innovation over the last decades and centuries, starting from the Bessemer steel process all the way to mobile computing. So for us, this is a big priority. AI we see as one of the big transformational opportunities over the next decade, along power and resources electrification. We talked a little bit about it yesterday, and then also longevity. And we don't just write about it, we also put our resources where our pen is, and we actually structured global teams that are now focused on these investment opportunity sets.
Very good. Mark Manchin, so my firm is Intrepid Growth Partners. We're focused on enterprise-facing applied AI companies at the growth stage, so the B round, C round, maybe later stage. Focused across North America and Europe, with a little bit of a tilt away from the Valley at the moment, which we can talk about later. And I think the one thing I'm focused on, if there's one thing, there's so many things, but the one thing would be what's actually adding value for end customers, what's actually got proper traction and adding end value. And there's obviously been a lot of press and research about this recently, about frustration within enterprise about traction and what's actually creating real return on investment for the enterprise over time.
On that point, I'm curious, both for Mark and Sandesh, especially when you deal with private market companies, some of them, they may already have revenue projections, but it's really hard to tell how defensible or how much of a moat the companies have. So I'm curious, how are you seeing that, like when you do due diligence on potential investments in the space?
Look, it's an evolving space and category. And especially when I think about sort of these durable moats, one really needs to think about what are the different things that these companies are doing. And one thing that is always underestimated in some fashion is the change management that's associated with many of these projects. So if you think about a lot of the easy calories, lack of a better word, it's usually a single sort of productivity tool. And there is some nuance to, like, especially in coding, you can see that. Developers are generally a little bit more fickle. And some of this revenue is transitional in many ways, because I think the next coding platform, the next tool that comes along, you're likely to just shift, because the pace of innovation and the change that is happening here is so rapid that early dollars may not really indicate that you're truly building enduring sort of long-term moats. So when we look at enterprise, a lot of times we're thinking much broader. We're thinking current workflows, and we can debate whether workflows is the term that we have to use, but AI getting embedded in sort of the nature of the work And when I say change management, the reason I bring that up, and everybody can reference the MIT study that recently came out, where AI was sort of, the early days of AI, lack of a better word. And in these cases, a lot of the times, the people who were trying to do the work was just stuff that's pushed down from the board on down, right? Hey, do something with AI. And they're just learning. And in many cases, these are, the people that are actually trying to evaluate it, the incentive scheme is sort of not perfectly aligned, right? So many cases, if AI is truly, like really successful in many ways, some of these jobs that you may have may actually be sort of threatening in some fashion to the people who are actually doing the work. So they're not even incented in many ways to make this work. So it's these types of different threads that we try to pull on to try to see whatever revenue we are seeing in our companies. And by the way, some of these things are getting solved in real time. I think that's sort of the criteria under which we try to evaluate whether this revenue is actually durable.
Yeah, and I totally agree. And I'd add, there's various things that we look at. I'm sure you look at as well that in indices of defensibility of any of these companies. That's the key question with these companies. One thing we've done, we're not investing at the super early stage or early stage. Where there's huge weight of capital going in at the early stage, and much harder to predict the defensibility at that stage. We're investing once we see product market fit. Real product market fit, so not proof of concept. So picking through and seeing what's got real product market fit, understanding the unit economics, understanding the value add of it to the enterprise. So net of all the costs, is it really replacing other processes that were more expensive or people were more expensive, and therefore there's real sustainable value add over time for the end customer. Obviously, the nirvana is proprietary data sets. If they have locked up proprietary data sets, that means the models continue to have edge over time. So that's fantastic if companies have and can sustain a data advantage. I'd say the other thing, regulatory barriers. We like regulatory barriers. If you can get through them, it means it's harder for competitors to come along and get through them, or just the inertia of different industries. It's actually quite good for to sustain competitive advantage. And I'd say that ultimately we're looking for, companies, two more things. One that are away from the blast zone. So when Sam Altman wakes up tomorrow morning, he doesn't say, "Oh, that looks quite nice, we'll do that." And it's obviously LinkedIn. We'll do that. And so you're going to be away from the blast zone of the sort of super scale capital, so it's just not very it's off. Not quite niche-y, but off some distance away. And the final one would be companies that can grow from just being a simple point solution, just doing something that's very simple into something that creates more system-wide change. So, for example, an example would be within hospitals and healthcare, where you have a sensor in a hospital room that's doing one thing, for example, predicting whether a patient's going to fall over or not. But that could be used, once you've got the sensor in there, it can be used for so many other things as well, so respiration and other aspects of physiology or mental well-being as well, for example.
Interesting. Erica, how does those affect you when you think about investment opportunities in the public market? Because a lot of companies you have to evaluate actually on the defending side of this. They're seen as the kind of incumbents or people who are facing innovation dilemmas, or especially the traditional SaaS companies that people are trying to see, are they going to be AI aided or actually be challenged by the AI native companies?
Yeah, I think the last question that you just mentioned is going to be the key question in any investment domain now. Is this company being disruptive by AI, or is it benefiting from AI? But I still owe you an answer to your first question about the one investment opportunity. I think the one thing that we are saying about AI, it's the most dynamic opportunity set ever. And therefore, we think about the opportunity set in a value chain where you have the enabling layer, the intelligence layer, the large language models themselves, and the application layer. And in the public markets so far, it's all been about the enabling layer. It's all been about those companies that sell the picks and shovels for the AI gold rush. If you look at the top performers in the S&P 500, since the launch of ChatGPT, the number one performer is NVIDIA, up over 11x, so almost venture returns. Maybe exceeding venture returns in some instances. Broadcom and Arista, all companies that provide key ingredients to the AI data center. So now the question, of course, is where are we going next? And I do think the big opportunity is going to be on the application layer, driving value with the end consumers, enterprises, but also just the general public and the main consumers. And I think there we'll see probably the opportunity set evolving much faster than we think. Because if you think about OpenAI right now, it already has 800 million weekly average users. And it's so easy for a company like OpenAI to flip the switch and start monetizing that user base. Because the granularity and also the depth of the data that OpenAI has about all of us is so much richer than any social media platform. You probably know the statistic that if you have 70 likes on Facebook, that Facebook knows you better than a friend. And 200 likes and Facebook knows you better than your partner knows you. So I wonder, right, with these large language models, they may know us better even after 5, 10 conversations. And so monetizing the consumer at scale in those domains, I think, is one of the first monetization levers that we'll see.
I want to double click on your point that there seems a bit divergence of how public market is rewarding the infrastructure layer more than others. Maybe in the applications layer, people are not sure if will be the clear AI winners yet. Is that because probably like in the private market, it's harder to find maybe NVIDIA challenger or competitor versus Salesforce customer service or application AI native companies?
But I think in the public markets, I can just share, I don't think we have monetized anything in the public markets yet, right? I mean, it's relatively, the subscription levels are relatively modest, right, in terms of pricing. I think we'll see price increases over time. The value capture certainly is very large. So I think there it's just a function of making sure it's done in a way that's not too disruptive to the user. I think enterprise will take longer. We just saw the MIT NANDA study that showed that 95% of enterprise projects do not go into production. 5%, of course, do succeed, and those are very profitable for companies. But I think it will just take more time because organizations, there's always a friction with adoption. And like you said before, there is teach-ins, there's more work that needs to be done on getting large employee bases onto these platforms. So that will happen, and I think the ROI will be very great, but I think it's going to start with the consumer, and we just haven't seen that yet.
I think maybe picking up on that, right? I think this is actually two things. One is, I think the AI, at least the initial sale, has to be somewhat tops down. Because I think the amount of change management that is required, because it's not like the traditional way of thinking about workflows and the way we've thought about workflows in an application layer. This is fundamentally work. It's high value work. And if you get it right, I think it's replacing some level of automation, some level of work that somebody is doing today, right? So I think the incentives, going back to the point I was making earlier, is sort of not aligned right. So I think you have to first educate. I don't think there's that level of education that has actually happened in a lot of cases. And so it has to be sort of a top-down movement that allows for some of these changes to actually take effect. So that's one point. And a completely tangential point that I was going to make was, look, I think this is more from a startup and a company building perspective. I think when you sort of define this as work, I mean, there's 3 layers to it, right? So the application layer that we were talking about, all of the middleware that sits in between, and then there is the model layer, which is kind of the fundamental layer in all of these things. And so when you're thinking about doing a company or starting a company, you actually need to have expertise across all these 3 layers, because I think when you think about the first wave of companies, they were sort of thin wrappers that sat on top of these model companies that really didn't bring enduring value. And then there was a whole bunch of companies that were doing things that were in the middleware layer. Like, let me try to make something the model is not doing or needs to do to make it work with the application. I think what we are seeing is the companies that actually are building really enduring moats here are actually doing all 3 things, and they're doing something with work. And they're able to now, if it's something that needs to change in the application, they can make that quickly. They can determine whether they have to change the middleware, they can do that. If they need to control the model in some fashion, this is not to say that there's one model. I mean, they still can be based on a bigger foundational frontier model, but there's lots of model expertise, and maybe it's a mixture of experts. It's maybe some other way of making sure that the model is sufficiently guardrailed and it's doing the things that it's supposed to do, right? So I think both the application layer monetization that needs to happen, I think will come from native AI companies, and then change management needs to happen on the other side and has to be a top-down. So I think both need to work in sort of in parallel in my mind.
That leads me to the next question. Once you figure out the work itself, how do you price it when you try to sell it to enterprises? Mark, I know you work with a lot of enterprise like startups, and their conversations with their customers. How is that pricing strategy? Everyone's trying to figure things out, work out.
Yeah, and so I think generally people are trying to move from subscription-based pricing towards sort of result output-based pricing. What's the value add that you're actually creating, which I think most companies would like to move towards over time. I think it's interesting, the enterprises themselves, particularly the CFO, is a little resistant because it's less predictable for them, and it's harder to calculate for them as well. So whereas the subscription-based pricing, based on they can see it's predictable, they know what they're going to have to budget for the next year or so. Whereas if it's more of a complicated calculation, then they're a little resistant for the moment. I think the general sense is it's going to move in that direction over time. So CFOs will figure out, they'll be able to calculate the value add more accurately, more dependably. They'll want to pay for that rather than just seats that are not being used over time. And companies also have to be aware about the amount of compute they're using, the amount of expense that they are actually incurring. So the AI company themselves on providing that service. That's another thing they need to keep in mind as well. So it can be but over time, I think it goes to outcome-based pricing.
Yeah, we have examples in the portfolio that we can talk to. There's two companies that come to mind. One is a company called EvenUp. EvenUp is in the legal tech space. They do what's called demand letter generation for personal injury attorneys. So you can sort of imagine that you're doing a medical claim after you've gone through some kind of an accident. In a lot of cases, an attorney comes to you, figures out all of your medical spending across various service providers, needs to then collate all that data, then figure out a timeline as to when you went to where and how this whole journey for you in terms of the money you spent on your healthcare or getting back to where you were prior to the accident. And then you generate a letter that has some empathy built into it, but also has all of the accurate technical information, both on the medical side as well as all of the services that you then went to maybe multiple providers, and that is sent to the insurance company as an initial claim. This entire process is done by EvenUp through the use of artificial intelligence. And the way they price it is on a per letter basis. So to your point about outcomes, this is usually done by some army of paralegals, takes a long period of time, maybe 5-6 weeks, maybe 6 months in some cases, because it's a complicated case. And this entire process is now automated in a way that is sort of work, priced as an outcome, and all done through generative AI. So that's one example. Another in healthcare called Hippocratic. This is sort of, this is what think of as a registered nurse, calling on patients, pre a surgery or post a surgery, having your entire medical history, but also making sure that the care is within the protocol that maybe a hospital or a service provider has. And in this case, the RN or the registered nurse spends a few hours or maybe a few minutes with each patient. And that's the amount of time that she would be rather doing other things, which is actually helping patients that are in the hospital at the time, as opposed to calling somebody to get them prepared for a surgery. And in some cases, the AI, a voice agent in this case, has the capability of really having a long conversation, answering every question that a patient may have in the most empathetic fashion. And then this is obviously time spent. So it's enhancing the productivity of an RN. So it's priced accordingly, right? The value that it offers. So in both cases, outcome-based pricing, but it's a full stack approach oriented on some work.
Erica, in the public companies you see, is the transition to more kind of an outcome-based charging or business model, is that going to be a more painful transition for public companies who may have developed a very mature subscription models when it comes to, they have to provide a guidance and predictions every 4 months to investors?
Yeah, I think it will take a transition to new pricing models and probably may start even with enterprise license agreement to get whole workforce just more accustomed to a new way of working. But I do think over time that business model is going to change to more outcome-based pricing. And yeah, it will take time. It will be disruptive to a lot of business models. And there will be no new entrants into the public markets as a result of this, probably from your investments in your funds.
Sure.
So,
Hopefully, yeah.
We're going to open up to the floor for questions soon. But before we do that, whenever I have investors on the stage, I would pick their crystal ball and ask their predictions about the future. And I know, Erica, you actually did something pretty brave, which is making, I think, 10 predictions about the AI investment wave that was last year in September. Well, now that we're almost, I guess, a year in, is there any few predictions from that one you want to highlight from our audience here?
Yeah, we thank you for the shout out. We launched 10 predictions in October last year about how we think the opportunity set is going to evolve. So we're almost, a year in. We'll provide an update. We have to hold ourselves accountable to those predictions, of course. But I would say maybe, two ones that may still be somewhat controversial is one, the implications for software. So our thesis last year was that the superpower of generative AI is coding, and that just software will become so much more ubiquitous, therefore no longer scarce, and decrease in its pricing power. And that will be very disruptive for existing software companies that don't adapt. So we'll see that, I think, still playing out over the next few years. I don't think there is a clear verdict on that one. Certainly companies, and I think you mentioned that, that have proprietary data will be insulated from that, because that's ultimately where we think the value is. So software being disrupted is one, and then the second one was just on the capital intensity of generative AI, that we predicted that this CapEx cycle is going to last for quite some time and will surprise us on the upside. We still think that is going to be the case. We recently actually also published a paper on the number of floating point operations per second that Gen AI is going to do by 2030 to get a sense of just how much compute we may actually need. A lot of it, actually the vast majority of it, is driven by agentic AI, so autonomous agents. And we think that this will be 5 times what we actually have installed at this stage. So maybe those two, but we'll provide a full update on our predictions in a few weeks.
I'd say beware of the hype and the FOMO. And so, not every company is going to justify 50 to 100 times revenue valuation. And so I obviously, I love optimism. We're all in this, probably all here because we're optimistic, but not every company is going to be in that top 1%. So I'd be really, really selective, really careful, because there'll probably be a reset evaluation on the majority of companies over time.
We can talk off stage on what's on the watch list of bubble bursting.
One prediction I'll make is whatever prediction I make today is probably going to be wrong in a year's time. I think that internally we try to do these sort of 5-year or even like a year prediction, and we went through this long exercise trying to see if we can, with some level of conviction, say a few things. We see a lot of young startups, so I think we can kind of draw the lines. And when we were discussing it as a team, it was pretty clear there was a lot of hesitancy to go out and put something out there because the rate of change is so rapid. Everything that we think we were, it's very difficult to be precise in the near or medium term. In the long term, I think you can. So I think, the only prediction I'm going to make is that, whatever I'm going to say today may be, fully wrong in a year's time.
That's why we really need to commend Erica and her team to be able to put out that predictions, and looking forward to see the full updates on the 10 prediction. Thanks again, Mark, Erica, and Sandesh for providing your insights. I think we're now ready for questions.
Yes, this was fabulous, but I do have to ask you a question. How many of you, the previous panel, they talked about cheating, the students cheating using LLMs. I want to ask you a question, and I want you to be honest with me. How many of you yourself cheat to use LLMs to see what your analysts and your junior teams have done as part of your due diligence process?
Entire management team. Our entire partners are looking at ChatGPT when every one of our investment professionals is presenting anything in real time. So yeah, it's happening. Hopefully it's not hallucinating the entire time. Right. And people are smart enough to understand what questions to ask. But yeah, it's happening in real time. Yeah.
Yeah. I'm not sure.
We call it research.
Exactly.
Like everybody else. Yeah.
Exactly.
Yeah. Fabulous. Okay, we'll open it to the audience. Sir, go ahead. And keep it short.
Sure. Question for Erica. How do you think the security part of the AI code generation, what's the impact, and is there a good opportunity to produce some software to control the code security part?
Security? Yeah. Just in general, right? No, I think it's a key area, and a key area of investment, for sure, because, I mean, there's multiple dimensions to it, right? It's data security, it's code security. And I don't know, maybe I'll also ask you what you're seeing in the private space, because of course this is a really new opportunity that's emerging to make sure that the data that is actually ingested in the models remains private, but also the code itself.
Yeah.
Are you seeing any opportunities in the private markets? It's probably less a public market question, but I think the opportunity set is going to be huge.
Yeah, I mean, the massive proliferation. I think everybody knows there's an increase in attack vectors. You know, more vulnerable, you know, more surfaces that are available, more issues that are evolving to manipulate and attack these models, which I'm sure the last panel talks about. I wasn't listening to it, unfortunately. But that's a huge opportunity for investment over time and is moving quickly.
I mean, there's two aspects, like securing AI and AI security, right? So you got to get both things working in parallel. And I think securing AI may be more of a big foundational frontier company problem, that they have to ensure that that doesn't happen. And AI security, using AI for, you know, figuring out vulnerabilities and attacking, and as well as using AI to kind of defend yourself. I think those types of opportunities we are seeing. A lot of native AI companies, it's unclear to us yet, you know, how to predict what layer and how to go about doing it. But there is just a ton of activity in the category.
So we have one question. Yeah, one quick question for Sandesh. You mentioned that the companies that are succeeding are the ones that are operating in all three levels, model layer and middle layer and the application layer. Can you give some examples? I'm like intrigued by that.
Yeah, I mean, like that's like core to our thesis. I mean, the two companies I mentioned, EvenUp and Hippocratic, work, middleware, and the models. All three of them, they control. They don't necessarily have their own frontier model capability, if you were asking me that question. You know, they usually, you know, in the case of Hippocratic, they chain together some 15-odd models. You know, there's a core model, and there's 5 or 7 other models that do a brunt of the work, and then there's 5 or 6 models that keep the, you know, the 12 or 15 models actually honest and sort of, so it's this sort of, you know, mixture of experts approach to model capability. It's true for Ryder, which is another enterprise AI company, where they also work with a set of models. You know, they have their own model. They also can work off the frontier models. And so there's guardrails built into it. And this is an application at the end of the day. So everything that goes from the model to the end. So EvenUp, Hippocratic, Ryder are examples where it's full stack. And actually, a lot of these companies are vertically oriented too, because I think when you start talking work, you can't think horizontal. You have to really think about something that's more vertically specific.
Yeah, so half our investments so far, they're full stack. So in programmatic advertising, Stack Adapt developed all its own models for, you know, for the placement of advertisements away from the walled gardens, and all the way up to, you know, the implementation. And then Skin Analytics, which is skin cancer diagnosis, again, trained all its own neural networks from the get-go over 10 years on proprietary data sets, and, you know, up through the implementation through healthcare systems.
It's actually also one of our predictions that companies are going to increasingly verticalizing across the value chain, and that's a key to success. Yeah. So, and there's some public companies, of course, who are doing that already, and one is obviously very close to here, all the way from making the chip to having the application layer. So I think it's a great question.
Great. Thank you very much, Krystal, for fantastic moderation, and thanks to the panel. And thanks to the audience as well.